is you need to own assets because the assets are not going up in value. The currency that's being traded for those assets is going down in value. That's all you need to know. Inflation will continue and they will print a lot. And when they do, you're going to see things like gold go from 3,000 to 7,000 to 10,000, to 20,000. And you're going to see Bitcoin go from 100,000 to 1 million. That is the thing that can save you, is having something that is not being devalued. Everything else around it is, meaning every other currency in the world. Protect yourself, because whatever the timing is, Larry's right. The big print is coming. It's just a question of when and whether it's going to be catastrophic for the dollar or not. But either way, it's going to be meaning hyperinflation. But either way, it's going to be painful for dollar holders and any other currency in the world.
Lavish begins with his most important piece of advice: own assets. It doesn't matter whether it's real estate, gold, Bitcoin, fine art, or collectibles. What matters is that you're not sitting solely in fiat currency or promises backed by fiat currency. The logic is simple. Assets are not going up in value. Instead, the money being traded for them is losing value over time. The dollar you hold today will buy you less tomorrow because policymakers will continue to inflate the money supply to support debt-heavy economies.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
The message for the listeners is own assets any way you can. Get assets, whether it's real estate or it's a hard asset like gold or Bitcoin, arts and collectibles, whatever it is. Like, own assets. That's number one. And then focus on the ones that are not risk assets if you can. Bitcoin's been a risk asset, but it's moving out of that class slowly, but it is, and evidence of that with Silicon Valley Bank. But that's the most important thing, is you need to own assets because the assets are not going up in value. The currency that's being traded for those assets is going down in value. That's all you need to know. Inflation will continue. It will continue, and it will get worse. They will print more, and they will print a lot. And when they do, you're going to see things like gold go from 3,000 to 7,000 to 10,000, to 20,000. And you're going to see Bitcoin go from 100,000 to 1 million. It's just reality. And because there's a scarcity of them, and people believe in the network. So for those listeners who don't understand Bitcoin and still need to study it, it's a very simple equation. It's run on math. It's governed by a mathematical equation that limits the number of Bitcoin the total number that will ever be created to 21 million. Each of those can be split up into 100 million pieces, satoshis, which are like pennies. So there's enough of it to go around the world, and there's enough of it to swallow a massive amount, pretty much all of the store value assets in the world, and unlike gold, it's easily transferable. It's immutable, meaning the code can't be changed. If you own the Bitcoin, you have the keys to it. That's it. It can't be changed. It can't be taken from. It can't just be, they can't change their mind and say, oh, I didn't really send that to you. They sent it to you. You have the keys. That's it. It's on the time chain. It doesn't change. It's immutable. And it's backed by 80 terawatt hours of energy use annually, which is the equivalent of 21 full-scale nuclear reactors running 24/7. It's nation state resistant. So it's the strongest, hardest currency out there. And so if you're a gold bug and you don't own Bitcoin, I do not understand. You have not done your homework, and you need to quickly. But that's the message. Somehow find a way to buy assets. And the good news is with something like Bitcoin, you can buy as little as a dollar worth every day, or even less than that becomes economically less attractive because you have to pay some fees to trade on the network. But you can buy as little or as much as you want when you want. Just start buying it regularly, every week, every month, whatever it is. Just put a little bit away, and just get hard assets, because that is the thing that can save you, is having something that is not being devalued while everything else around it is, meaning every other currency in the world. And so if you own treasuries, which is the classic argument, but you get treasuries and they're trading above inflation. Are they? Are they? What's inflation? Is inflation the 2% to 3% that they're quoting at the Fed? Or is it the expansion of liquidity and money supply, which is closer to 7% plus? That's the number I use, which is you're losing 7% of your purchasing power every year, effectively. And so if you're not making more of that on a bond, then you're getting a negative real yield, meaning that you're losing money. The money that you have in that treasury bond is melting every year, right? So that's a bad trade. A good trade is to borrow at 5% from your mortgage, whether it's if you have a 3% mortgage, you have made out the last number of years because your house has gone up in value. I mean, again, the currency used to buy that house has gone down. Your house has gone up in value far faster than that 3% mortgage rate, and the expansion, and that's due to the expansion of liquidity in the money supply. So that's the message. You protect yourself. Protect yourself, because whatever the timing is, Larry's right. The big print is coming. It's just a question of when, and whether it's going to be catastrophic for the dollar or not. But either way, it's going to be meaning hyperinflation. But either way, it's going to be painful for dollar holders and any other currency in the world. That's my take on it.
The United States currently owes nearly $38 trillion. Normally, debt is the borrower's problem. But when the borrower is the world's largest economy and reserve currency issuer, the debt becomes everyone's problem. Other nations cannot afford to see the U.S. collapse. They must keep lending, keep buying treasuries, and keep the system afloat. This paradox ensures that the debt cycle continues regardless of sustainability. Lavish sees this lasting for decades. While some, like Larry Leopard, warn of collapse within 5 to 10 years, Lavish believes the system can muddle through for 20, 40, or even 50 years, especially as Bitcoin gradually absorbs capital from other stores of value.
I see Bitcoin becoming the ultimate store of value, taking away. You've seen Jesse Meyer's chart of $1 quadrillion dollars worth of assets in the world that are store of value assets, and I see Bitcoin can just continue to take out of each bucket. So far, it's been taking out of that equity and gold bucket primarily, but it will start taking capital from the real estate bucket and then eventually from the bond bucket, and becoming the ultimate store of value. And so, and that does extend the runway for particularly the U.S. dollar, I believe. And so, and it can go for a very long time, 20 years, 40 years, 50 years. Larry Lepard thinks that, we're talking 5 or 10 years at most. He and I debate about this. I think that's a little bit early, but, you never know. He could be right. He could have just a complete collapse. We could run into a situation that we do have a black swan, and we get hit the big print. I do believe there is going to be a big print. The question is how big. What kind of
money?
Is it going to be like a few money bazookas worth of money, or is it going to be a tsunami? I mean, last time we printed over $5 trillion. This time it may be 10 or 15 or 20, who knows?
Yeah.
And that could really destabilize confidence in the US dollar if they did something like that. But what's the choice? You can't have markets collapse. We are so financialized in this country and now across the world, because the U.S. stock market is the largest in the world, and we have the largest economy. Like you can't have a massive recession in the United States without sparking a global recession and global depression. You can't, and they know that, and so they will print to avoid that and just kick the can down the road and say, "Oh, we'll pay off that debt someday." No, they won't. Of course, they won't. It's just the world is lending to itself, to each other. They're just borrowing future productivity and pulling it into the now. They're doing it irresponsibly. You can do it responsibly. You can take on some debt and build a business and pay it back responsibly, but they didn't. They took on way too much debt. Now they're not going to be able to pay it back. And there's that old saying of, if you owe the bank $1 million, it's your problem. But if you owe the bank $100 million, it's the bank's problem. Well, in this case, the United States is the customer, and they owe the world $37.5 trillion, $37.8 trillion. That's the world's problem now. So, they got to keep going. You got to keep lending to them. You got to keep the engine going. Nobody wants to see the United States collapse. It would be catastrophic. So I do believe that it's going to go on longer. It's going to go on 10 or 20 years at the very least. It could be 20 to 50 years. And Bitcoin could extend that runway quite a bit. And at the same time, take capital out of other buckets of stores of value and go from a $2 trillion asset to a $20 trillion asset to a $100 trillion asset. Now, at that time, who knows what that 1 quadrillion bucket is? Is it 2, 4, 5, 12 quadrillion? But Bitcoin's going to be substantially larger as a percentage of that bucket in the future, in my opinion. I think the years of ZIRP are over. Even if the Fed lowers rates to, 0% or 25 basis points, you're not going to see the long bond go down to 25 basis points. It's just not going to happen. Investors are savvy to the fact that there's going to be inflation on the back end of that. Yeah. So whether or not the Fed wants to, the only way that they could keep those rates down, Brandon, is yield curve control, which is out there buying them themselves, which is yet another form of liquidity. Then you're everybody. That's the effective that is effectively turning Japanese, where you're using your yield curve control. You're printing your own money. You become the largest buyer of your own debt. Would they like to have a 50-year, 100-year bond? Sure. Who wants to buy that? Do you want to buy a 50-year or 100-year bond at 5%? Hell no. Hell no. Are you crazy? Think about how much duration risk is on that. Meaning the effects of a long-term structural change in inflation, the effects on a 50 or 100-year bond would be absolutely monumental. It would be monumental. It would destroy the value in that holding. So, of course not.
So, where does Bitcoin fit into this macro puzzle? Lavish highlights Jesse Meyer's chart showing $1 quadrillion of global store of value assets, from equities and real estate to bonds and gold. Bitcoin, currently a $2 trillion asset, has only begun nibbling at that bucket, mostly drawing from gold and equities. Over time, he sees Bitcoin siphoning value from real estate and even bonds, expanding to $20 trillion, $50 trillion or more.